Alright, so I'm getting in short here. Stop loss is at the high of the fair value gap. I don't want to see this fair value gap filled. Fair value gap get filled all the way because we have this order block as well as this breaker. So this should be a very high probability fair value gap, which is why I'm having a very tight stop loss. And I just want us to start melting into the sell side now. So you can see we come up, hit the midpoint of this gap, and immediate delivery. This is telling me that I am in a very high probability short right now. And we're going to see if we can get down to our final target. After we take out minor sell side, I'll move my stop to break even. Alright, so there's your minor sell side. Can move our stop to break even and see if we want to keep on dumping off. We have this low, then we have this low, final TP. Very small gap on the 1 minute. Alright, ES is already taken out previous day's low. ES is very weak. Need to see NAS start doing the same thing here. See if we can start displacing to the downside here. Yeah, this is 15-second inversion. Want to see a strong displacement here, not like what we did when we first took out minor sell side, how we took it out and then retraced. I want to see us start going deep down. And I'll move my stop loss again to this high because I don't want to see that high get taken out. If we do have any retracements, I don't want to see us go past. Just have this. Just pay attention to this price, midpoint of this long wick. If we do want to retrace, I'm gonna take a partial at 19,844. I'll trail a stop for half once we take out that liquidity, like how we just did. So I'll trail that. So we take a partial there, half my position off, stop at break even, and we're going to see if we can get our final TP here, which is the sell side at 19,818, which is previous day's low. You can see that 15-second inversion for value gap delivered nicely. I'll move my stop a little bit more to right there. The reason I'm moving it there is because we have imbalances as well as this order block wick midpoint, so I wouldn't want to see price come above that, and if we do, that means we're likely going to go higher. So that's why I have my stop at this candle's high, the 941 candle's high. It's a safe stop loss place for me. Actually, I'll put it at 19,799 because that's where the That's where the 1 hour survey gap is, which is what I'm looking for. But I'll keep an eye on that on previous day's low still. Do I think it's going to shoot up? I'm not sure. Maybe we could, but I don't really think so. I think after we come into this 1 hour for value gap, we might just sit around and not really do much. Or we can have some kind of retracement. But yeah, right now I'm just looking for this 60-minute for value gap to get hit. See a premium. See where our premium pricing is for this retracement. If it wants to get up there. If not, we just have this fair value gap. We have volume imbalance right there that we just hit. We have the macro starting soon, so should see it run. Should see it run lower here during this macro. Just remember, I'm watching the midpoint of this long wick. I don't want to see it close above it. We have this fair value gap here on the 1 minute. And okay, I get stopped out for the rest of my position, so end of day there. Pretty good day for the first day on these funded accounts. I'm gonna lock myself out. Alright, so I'm locked out of my accounts now, and now we just watch the charts if you guys still want to watch. So you see how this is the importance of stop loss placement, right? So I have my stop loss right here because, like I said, if we come above here, the chances are we're very likely going to go higher, and I'm offside. So that is the way that I see a stop loss. And yesterday, you remember, I was talking about like how I view my stop loss, and I view my stop loss as, you know, something that's there to do its job. And as you can see right now, it did its job, right? If I didn't have a stop loss placed, or if I had it like way up here, I would be in drawdown, or I would be you know, panicking right now because of this huge run up. So that is why I trust my stop loss, and when my stop loss gets hit, I am thankful for my stop loss being hit. I'm not mad at about my stop loss being hit, even though, you know, it's not just because I took a partial and got my profits from this trade. It's not the reason why I'm not upset. I'm not upset because, to me now, I don't really see a run. I mean, yeah, a run lower could still happen, but for me, the highest likelihood run was from the entry that I had down to that sell side. So, you know, I'm very happy about what happened. And yeah, stop loss placement, stop loss management. You guys got to see how I do that, and how it saved me, you know, from being offsides any more than I was. And I think that's pretty much it for that stop loss talk. Yeah, that was a clean short. Was that a 1 to 4? Let me see. Yeah, it was a 1 to 4 for like half my position, and then the rest got stopped out for a 1 to 1. So maybe like a 1 to 3 average for that trade. I was aiming for a 1 to 5, 1 to 6, but we never got it. We could still drop here, but I just wanted to. I had my stop loss there, and I got out there, so we could still see a run lower. But I think the highest probability short was the one that I took. I don't really think that this short is as highly probable as the one that I took if we do end up falling here. So I'm happy with what I got. But I'll stay on a little bit longer I'll stay on until this 950 to 1010 macro's over. See if we can see a run into that previous day's low or not, or if we end up rallying here. But you can see market opens what do? Fake move down, and then quote unquote the real move up. So this move up here is your Judas swing. This first initial move down is the fake move to get everyone, all retail, they see this huge drop, or not huge, in the moment it looked huge. I don't know if you guys remember, but we sold off here like right at market open. I was saying like I don't really trust this drop here, and then that is for basically the point of this drop is to have retail thinking like, okay, we're gonna sell off now for the day. And we also swept out a lot of sell side, right? If you guys remember from the 15-minute chart, there's a lot of sell side here. Or you can see it on the 5-minute. All these lows down here. We swept those out. And then we started rallying higher aggressively. So that is your Judas swing. This move up is your Judas swing. Everyone sees this. And either if they were short already off this initial drop, they're all panicking, right? Because we see this rally up. They're all panicking, shitting their bed. And getting scared of their position because they're seeing this big rally up after this drop, and they probably chasing price. Their entry was probably like down here, right? This is where their entry would be, and as soon as they enter, the market just runs against them, and they're like, that's when you start to think that you get targeted by the market because the market runs against you as soon as you enter, bro. But no, you just have a poor entry. So we get this Judas swing up, right? So that's your manipulation higher. So now people who were short are out of the market, and people who are looking for longs are chasing price now. They're all long now off this run up. So everyone's long now, and whoever was short is out of the marketplace because of this run up. And we take out some equal highs over here, even though it may not seem important to you, but there are stop losses up here on these highs. So that is buy side liquidity that was rated, even though it's just a 1-minute chart, even though it's not really like a swing, like a very apparent swing high. That's still buy side liquidity because those are equal highs. So people have their stop losses there. And then where do we retrace? Where does this Judas swing stop at? Opening range gap, midpoint. So that is your reversal point. So boom, we hit that opening range gap, midpoint, and then shift structure to the downside. The classic Blaysian 2024 model. I need to come up with a better name for that, but yeah, there's your 2022 model right there. I don't know why I have the 5-minute up, but there you go. Here's your shift in market structure for value gap entry with the breaker and order block. So that's why I was confident in putting my stop loss at the fill of this for value gap. I could have put it up here. I could have put it at this swing high, but based off my experience and my trust in my model, I felt comfortable putting my stop right there because I wouldn't want to see this for value gap get filled because of everything I just explained, right? Like price doesn't really have a reason to go higher and dig deep into this for value gap because we have this order block, we have this breaker, and all the damage to the upside was already done. So price will be in a hurry to sell off and make sure that we take out all the people that were long. So price isn't gonna come down, chop around a little bit, have those people who are long, praying to their God that price ends up reversing. No, they don't care about those people, bro. They're gonna make them suffer, and they're gonna drop price as fast as they could, which is what we saw here. So that's pretty much all the explanation behind my trade. I know I don't really explain it in the moment because I'm like focused on my entry and my stop loss and stuff. Like I still have to focus on my own trading, but that's basically everything I just said right now is basically what was going through my mind in the moment. I just wasn't speaking out loud. But that's basically everything behind the trade.